Hi everyone, welcome to this live coverage. I'm here with Yohay Elam. Yohay, how are you? Okay.
Hi Val, I'm doing great.
Okay. We are getting ready to hear what Elam has to say. What do you believe we are going to get today, Yohay?
Well, I think they're going to be dovish once again to tell us that we're not going to have a hike in June, or not in these words, but about this. The U.S. economy is slowing and to keep China stable. And I think the dollar bulls will be a bit disappointed. What do you think?
I do believe that the market will be a bit disappointed. I do believe that the market is getting into this event with too much hopes of a hawkish Fed, you know. Maybe they think they were going to get some tips about, I don't know, maybe a June rate hike. I know the dollar's reaction may not be in line with what I'm saying, but I still believe the market has too many hopes today.
Yeah. Just remind everybody there's no press conference today, no new forecast. We do have later tonight the Bank of Japan talking, so
and we have
be interesting as well.
Okay, and we have the Reserve Bank of New Zealand in the middle. So we have 3 central banks in something like 6-7 hours.
Yeah. For central bank geeks, this is prime time. This is a party.
Yeah, it's a party. Anyway, the euro seems pretty bullish for me right now. I don't know. We are going to, of course, read the statement, and maybe we have a lot of initial reactions, and later we have some better definitions. But overall, if they don't say that the risk of economies balance or nearly balance as they did in October or December, that will be pretty dollar negative, because I think it will mean that we will wait longer for a rate hike, and therefore that should give the euro the boost it's needing to break higher, right?
Yeah. What lines are you watching on euro dollar?
First, I'm looking at the 1380.90 region. That's the immediate support, the resistance, right? And above that level, I do believe that the pair can go up to 1460, which is the next one, the next critical long-term resistance we have been discussing for a couple of months.
Yeah, 1460.
Sorry, we are having some technical issues about sharing these at home, and it's asking me. I will try to solve it, but not sure how. Anyway, sorry for that. And what about the pound? The pound has been pretty strong. It has reached a fresh 2-month high, and it's holding in there ahead of the news. And I have been watching the daily chart, and this February highs in the 45.70 region seems we are stuck around that level. I believe that if the Fed helps, right, with a dovish statement, we can go up to this 46.60 pretty fast, which is February high. And if we take that level, well, I do expect a further recoveries up to 49 or so during the upcoming days.
Yeah, we found disappointing. Well, it wasn't disappointing according to expectations. So indeed, the economists that probably worries to already have some kind of negative effect on the UK economy. But with now less fears about this Brexit, about the referendum in 2 months, pound made quite a rally, quite a rebound.
Yeah, I hear you a bit choppy. I'm not sure how to say this in English, but it's like the sound comes from your side. Can you hear me okay?
Okay, well, yeah.
Okay. Anyway. Okay, oh well, we have 10 minutes to go. What happened with commodities? We had a better AP report in the US later yesterday, and now we had a bad AR1, and gold is oil. Sorry, is they are struggling anyway at fresh year highs. Uh, I'm not sure if we are going to see an interesting reaction in oil today after the Fed. I believe that a stronger reaction would come with gold. Gold is quite related to the Fed decisions, right? And they have been trading accordingly. If a Fed is dovish, gold jumps. If the Fed is hawkish, gold plummets. What I have been seeing in the daily chart is that we have been ranging, consolidating gains with a middle positive tone. So, and market is now in wait and see mode. And today could bring some interesting movements in here. Okay. Uh, I don't know, maybe 62, 60 to 60, which is the high we reached last week. The previous one, sorry, is the level we should target first in the year with the Fed, right? Let's see. Anyway, as I said before, remember we have the initial market reaction to some headlines, and once the market reaches the full statement, we can get opposite reaction in the market. So beware of that, guys.
Yeah, very cool.
Yeah. Dollar Japanese yen is pretty tied up, right?
Yeah, you're finally moved.
Yeah, I do believe that we may see a bit of waiting also in here after the Fed, if the Fed is not something really shocking, until the Bank of Japan. But for the most, I do believe the market is expecting the Bank of Japan will remain on hold, right? No more easing today in Japan.
Well, we heard last week the rumor reports from Bloomberg about the Bank of Japan beginning to practically pay banks to lend out money, or in nicer words, to apply negative rates to loans, like ECB's TLTRO. That's what triggered this big move up in dollar yen, the collapse of yen. But yeah, in recent days, we heard advisors expect Japan officials saying, actually, it's not the right time for the Bank of Japan to act, or something like that. So we'll have to wait a few more.
A few more?
Of course, the bank makes this in less than that. We don't know the exact time, but
okay. I can hear you clearly, Yohay. The sound comes and go. Maybe that's you were saying they will wait. What?
I'm saying the Bank of Japan makes its decision later tonight. There is never an exact time for when they announce the decision. It's a surprise. Usually, when they wait more time, the market expects them to do something, because it means if there is a longer discussion, it means something is coming up. But it's not necessarily the case. So we might see lots of action in the Asian session tonight.
Okay. Now I hear you properly. Great.
Yeah. Sorry, Val, and sorry, everybody. I'm traveling, and Wi-Fi in this hotel is okay, but not superb.
Okay, don't worry. No problem. We've all been there, done that. Okay. And Australian inflation was a big disappointment. The Aussie plummeted, but I was watching in my chart, right, that the pair has been, the Aussie dollar has been rallying pretty much since the year started. And this poor inflation figures released during the past Asian session has sent the pair down to the 23.6% retracement of that rally. Actually, it's little relevant despite impressive daily basis. And the retracement is not enough for me to say, okay, we have a top in the Aussie dollar and the trend has turned bearish, right? It's quite too early to call that. Of course, we have some first signs that may be happening here, but well, it's great that we have the Fed today, because that will bring a lot more definitions, because if the Fed comes with a dovish stance, that will be more dollar bearishness, and therefore the pair will probably resume its advance after the market forgets this poor first quarter inflation data in Australia, right? Anyway, I was watching these lows around 74.80, 75.10. I do believe that that could be the line in the sign because it's mostly around 38.2% retracement of that same rally. So for me, to start talking about bearish trend in here, we need to take down that level, right? 74.80, 75.10, that region. In the meantime, I believe that this is just corrective and the market can resume its advance. Let's see what the Reserve Bank of New Zealand does today because it will also affect the Aussie, right, Yohay? What are we expecting from
the Reserve Bank of New Zealand makes its decision, if I'm not mistaken, 3 hours after the Fed, and they are not expected to make any changes. And last time, I think, or 2 times ago, they surprised with the rate cut from 2.5 to 2.25. There's some suspect them to cut the rates to 2%, especially as the New Zealand dollar is relatively high, and also in New Zealand inflation is not so good. But other figures, and this applies to New Zealand and to Australia, other figures such as jobs, house prices, and the economy in general, both countries are doing well. So I think both countries will not be in a rush to cut interest rates anytime soon. They will prefer first to talk down their currencies for a long time before really pulling the trigger on a rate cut.
Okay, well, 2 minutes to go, less than 2 minutes to go. Guys, remember we have a bit of a delay in here. You will see the news first and then hear what we comment about that. But, well, no rush into the market after such a big announcement. Okay? Okay, here we go. Market.
Yeah.
How are the chances? Sorry, what?
Just a statement this time, no press conference, no forecasts.
Yeah. Short coverage then. I hope not. I really hope the market brings us something interesting to work with today. But well, let's see. Okay. Counting down. Okay.
Only 2% chance of hike according to one.
Dollar is heading higher, sharply higher after the announcement. They leave interest rates unchanged as expected. The Aussie is plummeting to fresh lows. Okay, they remove the reference to the risk coming from global events, meaning they are not concerned about China this time, but they were in the previous one. Sorry for that. So it's what's fueling the greenback right now.
Yeah, still one member voting for a rate hike. That's the same as George, like in the last meeting. They're less worried about global markets, but we already know that. I don't see them hinting about a rate hike in June, so I don't see it as that hawkish. But okay, the dollar is reacting.
Labor market improve even amid signs of slower growth. Well, we have discussed this plenty of times in this coverage. The fact is that any Fed decision rests in two legs. One is employment, and the other one is inflation. And employment has been doing really good for long, so it's not a surprise that we have good news or the sector is growing. The problem, it's always inflation that it remains depressed.
Yeah, but they say that survey-based measures of longer-term inflation expectations are little changed on balance in recent months. No change on the inflation outlook.
Okay. Economic situation warrants okay. Gradual hikes.
Looking for more interesting determining the timing and size of future adjustments to the target range for the federal funds rate, the committee will assess realized and expected economic conditions relative to its objectives, blah, blah, blah. What I see here is determining is future adjustments to the target range. Okay? So they don't say about the next meeting. In October, they talked about the next meeting, and that was a big hint that they would follow this in December with the rate hike. Now they say future adjustments, which is a bit more vague. So I don't see here any kind of hint about a rate hike in June. And in the meantime, the dollar is bouncing back down. Sorry, the dollar is bouncing back up.
Yeah, it's losing the initial momentum. The market is erasing the initial reaction. The euro has been as low as, let me check in my charts, 1271, 1270 is then the immediate support. Is somehow the market managed to break below that level, we can go even lower, but it seems we are not going to have that much of an action.
No, I think, as you mentioned, the trigger for the rise of the US dollar was international developments. I don't think it's a surprise because we know that things have improved, and but they're not hinting about the hike in June. It's not hawkish.
Yeah, I'm seeing that gold has reversed the initial movement and is now trying to recover to positive ground. Not actually that we believe in a June rate hike, right?
Yeah, expectations for a June rate hike were for about 20%. Let's see if they change. I don't know if we'll have this data immediately. Oh, they're a bit higher now. So it's now 30% expectations for a rate hike according to bond markets. So bond markets as slightly more hawkish than expected, but still no shift. There's no smoking gun, no June rate hike. Okay, I'm sharing it now on the screen. The CME Group Fed Watch implied probability of a rate hike. Now 32% for rate hiking.
Okay, not much.
No, but higher than before.
Fed talks of moderate.
The dollar is back.
The initial reaction has been pretty much erased. The dollar-Japanese exchange is about to get it to negative territory, and there it goes. And the euro bounced over 60 pips, 70, and there we go, breaking higher. That's a strong reversal in market move. After reading the statement, as I said, the immediate resistance now is the 1380-90 region. It's a strong strategy resistance. That's the immediate one, 1380, 1390. If somehow and later on the pair takes 1410, we can go back to that 1460 highs, which is quite a relevant long-term resistance. The pound is a bit more pussy at this point. We need to take 46. We're regaining 46. Further gains.
Yeah, we have a range in euro dollar. It's not bad. Aussie dollar is tackling 26 level.
Yeah. They are starting to Okay, and there we are back to square one. I believe that we are not going to see much more of this in the market, but well, hopes is still a thing to lose. Anyway, uh, to sum up, what we have heard till now, it's that the Fed is less worried about the external factors weighing on the economy, but that they are not yet ready for a rate hike, right? They may or may not raise rates in the upcoming meetings, but the higher chances are that they don't, because the wording used in the statement makes us believe that they will keep on delaying a rate hike, unless we have really impressive macroeconomic readings over the upcoming month, and therefore maybe in the June meeting we get a clear clue or even a rate hike, but chances are still low, guys. Still quite low.
Yeah, I'll add that if they don't hike in June, they will probably not hike in July because they don't have a press conference. And in September, it's already too close to the elections. I remain with my expectations, at least for now, that the next rate hike will be only in December,
Yeah.
after the elections. So they'll have one hike in 2016. But of course, as they always say, they are data dependent, and so many things can happen between now and then. So, do you think they will raise rates this year, or perhaps even reverse?
I do believe that they will raise rates this year. I do believe that they have promised 4 rate hikes for this year, right?
At the beginning in December, yeah.
Yeah, in December. I mean, now we are talking about 2, maybe, right? So I do believe that if they take back again from those 2, they have sort of announced in this last previous meeting, I do believe that they will lost the confidence of the market and therefore being much more trouble than if they actually rise rates. So I do believe that we will have at least 1 rate June, September. June seems unlikely, so September, even though what you have said about elections, sorry, maybe they take their chances, particularly if we have better inflation. But they have to rise rates.
Yeah, it's also a question of their credibility, no?
Yeah, that's what I'm trying to say.
Yeah.
They will lose credibility.
So, yeah. Another thing to note is that tomorrow is the first release US GDP for the first quarter, and the Fed probably already has it before its eyes. I thought we would get a hint from today's Fed statement of tomorrow's GDP.
Okay.
I can't see anything that tells me if it's going to be better than expected, worse than expected. Do you think?
I'm not expecting much of the GDP figures, honestly. We're expecting 0.7%, right? Or something like that. If we don't have a good rating in there, I do believe the dollar would be really in trouble, particularly after soft statement, soft close coming from the Fed today. I'm losing you again, Yohay, your voice.
Yeah, can you hear me now?
Yeah, no, I can't.
Okay.
Stocks are happy. Take a look at the Dow.
Yeah, hikes. Party on. Although yesterday Apple reported its earnings and it was below expectations, and they're not the only company that missed expectations. So, I mean, if you move away from it and look at company profits, it's not a perfect world.
No, earnings are pretty mixed coming in Europe, also in the US. But I believe that the stocks market came into these earnings reports with low expectations, to be honest. I do believe that mostly the market was expecting a 7.5% decline in most of the US companies, right, in average. So bad reports if they are not that bad, won't weigh that much in the market as a good one, which because the surprises right now are of positive earnings reports. So the market will probably react better to those, not to the negative ones that they are already waiting for.
Yeah. 113 still.
Yeah, Lorex back higher. The price is midway in between the initial range. Unless we move above or below the highs or the lows post in those initial reactions, the market won't be able to set any kind of definitions after this event, right? But if we take 1270 or that 1369 euro, the same goes for the rest of the pairs, then we'll probably have some directional moves afterwards. It's worth mentioning also that in about less than 2 hours, the Wall Street will be closed, so volumes will decrease strongly, right? And they will return when the Nikkei opens, like 4 hours later or so. So don't, we may have some surprises then, some gaps, some violent moves.
Usually with Fed decisions, we have the first move, of course, itself. Then we have some analysts, especially John Hilsenrath of Wall Street Journal, when he analyzes the news, sometimes it moves the markets. Then we have a reaction in the Tokyo session, and then in the European session.
Yeah.
Let's see until the market sort of makes its mind on what happened, the jury makes its decision. So far, the jury is out, I would say. No clear decision. No.
No. A pity.
If I can get more news. Is there any pair you are watching, looking for action, something interesting on the charts?
I do believe that I would stick to the Aussie today, the rest of the day, because the bear is unable to retake the 76 level. So I know we have the Reserve Bank of New Zealand in the way that will wait on the pair, but for most, I do believe that that's what I will be looking for, and a continuous slide towards 75. 74.80, the levels I mentioned earlier. That's likely. That's something I will be following. I don't believe the euro can break lower and go to the main target. That it's just the weekly low, right? The 1220 region where we bounced from early Monday. But that's for me at the level I'm also watching carefully, because it's the 38.2% retracement of the latest bullish run. This is the rally begins with the March ECB announcement when the pair plummeted.
Okay.
Yeah, so I do believe that that's the major support, but we are far away. 100 pips for the euro these days seems way too much in one certain direction. Anyway, that's the level I'm watching. I'm not seeing it coming anytime soon, but a break below it would be interesting for me. An approach to 1460 also, because I believe that it will be a nice opportunity to take once again a short position. And honestly, not much. I believe the dollar Japanese yen. I was reading. We have record shorts in here according to the latest COT report, and that's why we have been recovering from that low set around 107, right, 60 or so. And what I'm looking at that it's also pretty interesting is that we have that 110.65 low this week, which was a previous low. We have saw around that level multiple times in February and early March. So something is cooking in here, I believe. there's a good chance that pair can go higher, but of course, uh, I was hoping the Fed was the first uh, year, and Japan will be the second. But well, the first one has just failed. So let's see what we can wait and see from the second. Right? Anyway, 1240, 1250, that's another level I'm watching. I would like to see the pair above this one to talk about a more constructive outlook. Anyway, and in the long term, unless we take 15, I'm not convinced that the pair can really be bullish, right? It will be short-term trading. But 115 is for me a line in the sand right now. In here. Okay, back to shorter charts. Sorry, I'm doing a mess with this.
Yeah.
Okay.
Okay.
Where are you, Yohay? Where are you?
I'm in Cáceres, in the west of Spain, Extremadura.
On holidays, or sort of?
Yeah, on holidays, but you know, I'm always connected to the market, so.
Okay, and but Maurice
traveling, but
come to the Fed when you are on holidays. He's on holidays and he didn't came to cover us. Not fair.
Yeah.
Right?
That's right. Yeah.
Okay, I don't honestly believe that we are going to have much more to add to what we have already said. So do you want to make a small wrap up?
Yeah, I think we can wrap up.
Okay, you go first.
Oh, okay. Well, the Federal Reserve did not make any changes to policy as they would expect. They did acknowledge the improvement in the situation, which is less problems global, namely China. They can't blame anymore. Financial conditions are improved. Didn't mention that. Also, inflation and employment are looking okay. On the other hand, they give us also any hint about rate hikes in June. They just said a few decisions. So Alex is a bit more optimistic, but no rush to raise rates. And action was the stronger U.S. Then we had the weakening. Now we're back to basics, and we'll have more reactions in the next session in Tokyo. Over to you.
Okay, well, I have to agree with you about the statement not being enough to convince us that they are going to raise rates in June. I'm still hoping for the 2 rate hikes this year, but you make a good case against me. For the most, I agree with you that the Fed has left rates unchanged, seems a bit more comfortable with the international situation, but that's not enough to tell us when or how or for how much they will move rates if they move them this year. And for the technical point of view, I believe that the market had not had enough to work with. If you take a look at the charts, we are pretty much neutral in the 4 hours, meaning we are not far from the previous opening, despite despite the spikes we had either side of the board. And while I believe the market will reserve itself for the upcoming events, right? New Zealand dollar, the New Zealand Central Bank, it's not that it's going to affect all the market. It will probably affect a bit the Aussie and the Canadian dollar. And the Bank of Japan may have the last staying for the Japanese yen and also for the euro, because it will affect euro Japanese yen, right, guys? But what I'm also seeing is that stocks are high, really high. Okay, so that makes me think that the market believes that we are having no rate hike at sight. And what I'm seeing is that oil continues to rally. Okay, so with stronger commodities, it seems we are going to get a bit more confidence in the market, and we are not going to think about the downside risk of the economies, okay, in the rest of the world, and that will be giving high yield currencies some room to rise. But anyway, waiting a bit more in the markets until we have final central bank, which is the Bank of Japan, in about 5 or 6 hours, more or less, because they never had a certain time. Okay? Okay, well, I do believe that's it for today, guys. Thank you for being here with us. Thank you, Yohay, for being with me despite your vacations. And see you soon, okay?
Okay, stay trading.
Thank you, and bye-bye, everyone. Bye-bye. See you tomorrow.
Bye-bye.
Okay? I will be covering live GDP release in the US. Okay? Thank you. Bye.
Bye-bye.